Predicting the future is something that humans have been doing since the dawn of time. From Nostradamus to tarot card readings, there will always be a business for trying to predict the future because the ability to act now on the knowledge of something that you know will happen in the future holds a huge advantage. But as a trader, do you need to predict the market's future to make money? Trying to predict single market events is never easy. There are a sea of professionals in the financial world who frequently get it wrong. Just as a broken clock is correct twice a day, there's bound to be some hotshot who gets it spot on. But it's not just the inept that get it wrong either. Errors in judgment are understandable due to the incomprehensibly large number of variables to consider in forming a hypothesis. But then there's always outside factors that have not yet influenced the scenario. Even after taking this into account, people go on the financial news channels trying to predict the market's future. But then they tend to talk in ifs and buts rather than giving definitive predictions. And of course, there's never any disclosure on how the scenario would impact their own trading portfolio. The problem with these guys, though, is that it gets the average day trader into the wrong mindset. And while you might think that isn't something that you do, you might well be wrong. Falling into the prediction trap, it's not difficult if you're not careful. Historical losses often put traders into a defensive mindset, and so when they do take a trade, they've got to be pretty convinced that the trade will work. But of course, this is no guarantee of selecting a winning trade. But when a trade does work, the trader figures that they were right in this instance, and so in the future, they struggle to find reasons why another instance of the same sort of trade didn't work. The perfect trades that we come across in the markets and can spot by scanning historical charts can also be counterproductive. Often markets end up testing specific prices and possibly turn from a point that we think of, but predicting this and trading the behavior are two very different things. Plus, if you look closely, historical charts are pockmarked with similar setups that ended up failing. But we remember the times when we were right more clearly as it feeds into our emotional self-belief system. In any case, there's a big difference between trying to predict market movement on a broad scale over a longer and non-specific amount of time and doing the same over the course of a couple of hours, a few minutes, or even a few seconds. Testing is one of those factors. When we test a strategy, we identify how frequently it scores a winner, not what the distribution of winners and losers actually is. The strength of day trading is that you can take many trades, so you can screw up on some and others can just not work. But you still end up turning a profit if the strategy has sound logic behind it. It is far more difficult to be specific about which trades will win or lose. When we trade, we have to make our decisions on what the market has already done. The inferences we glean from the market information is that it's probable that other traders will do something expected based on the same information we see, and we'll end up with a profitable trade. What other traders will do is another factor. On a very short time frame, it does not take very much of a change for different traders to step in and completely flip the situation on its head. And this is assuming we got it right anyway, of course. There are so many different things going on in the market at any one time that could influence another trader that it's effectively impossible to keep track of everything. Plus, just because something happens in a market that's normally unrelated, it could impact a larger trader's or fund's portfolio enough for them to have to do something in the position they have in the market that you actually trade. The bottom line is we can be right or we can be wrong on a single trade, and it's a mug's game trying to predict which it will be for the next trade that you take. The simple fact is that you don't need to try to predict what's going to happen next. All you need is a strategy that works more than it doesn't and the ability to follow your trade plan. So I'll leave the prediction game to the market prognosticators who frequent the financial news channels and stick to trading the probabilities.